Hey, welcome back. My name is Alex. In this channel, we document the growth of a $100,000 account I've created for my newborn son. We're growing the account using technical analysis, fundamental analysis, and some news. If that's something you're into, stick around. All right, Trump does it again. And this time around, like last week, we were saying that he was taking some shots at Canada. And we got the news over the weekend that Canada has rescinded the digital tax service to advance some, trade negotiations with Trump. So, these trade negotiations are obviously fluid, and Trump is doing his job, trying to negotiate for the country. It seems as every time we get a piece of news that is, okay, we're going to escalate here, literally the next day it de-escalates and something happens. So it's an interesting theme this year developing in the market where, basically anytime you have some sort of news, you base that moves the market, of course, like one way, within a couple days or a couple weeks, it just reverses. So you kind of have to fade any sort of bad news or even good news in this market. So that's all to report on the news side. And let's get into the market monitor and see what's going on over there. All right. So for those of you who don't know, the market monitor is a collection of data I've taken over time. It tracks the positions of stocks, whether they're in uptrends, downtrends, or going sideways. And with this information, it can let us peer into the market and see what we can expect going into the future. So with that, let's go check it out. All right. So we are currently market monitor green, and we are on day 6, and we've moved 3.74% during this cycle so far. Now, an average green cycle lasts about 12.6 days, and it moves about 3.78%. So, if we were to fill up a water glass, we're almost pretty full on the average side. So we've gotten there with 6 days, so it's a little bit, strong. So that either means, it's going to continue, or, we should kind of lay off the gas pedal here. Now, there's only one distribution count, so market's just very, very strong here. We're seeing under the surface a lot of stocks making big moves, a lot of good news coming out, and just interesting to know. So moving onwards to some more internals, let's check out the stage analysis. So currently, the stage analysis is 61% of stocks are in stage 2 uptrends, 13% of stocks are in stage 1, 5% of stocks are in stage 3, and 21% of stocks are in stage 4. So, that's what we like to see. We like to see stocks moving into uptrends, getting a little bit stretched here. 61% of stocks in uptrends is on the higher side, but it can certainly get more overbought, because we're only at about, 74%. When we add up the stage 2 and stage 1, stocks that are exhibiting a lot of strength. So once that gets to about 80%, then it's very overbought. But so far so good on the bullish side. So moving onwards to some more internals, the VIX today, even with an up day. So today was actually what we call a VIX day. When we had an up day, and the VIX actually goes up. So that's something to note. We have the put call ratio of 0.57, which is very low. And 20% of or stocks that have made a 20% move in 5 days is at about 55 stocks. So it's a decently high number, but not incredibly, overstretched. Maybe around 80 or 100 plus is when it gets a little stretched. But still in good shape there, but probably needs a little bit of cooling off here, even though I've been saying that, but it just keeps rocking higher. So we'll just have to play it by ear. It's very strong market. So moving on to stocks making 5% moves. We had 29 stocks make 5% moves on $100 million volume or more. So that's a pretty decent number there. And our short-term momentum up indicator is actually kind of a little bit flashing a sell signal here, because today it's 164, and on Friday we had 166. So it's starting to go down. So I'm going to come out and say that the market's going to start pulling back here. moderately or could be severely because we're just so strong. But yeah, other than that, I mean, we're not really overbought on the TD sell, not oversold on TD buy. That's kind of a neutral rating. So nothing to worry about there. Yeah, and then lastly, the anxiety index is at 24K, which is pretty bullish. The midterm 63P, which is stage 2 plus stage 1, is at 74%, which isn't that overbought at the moment. Just we're pushing to the higher end, but not overbought. And the long-term breadth's at 27.94, so back into good shape there. Yeah, just the market's very bullish, very strong, not really exerting itself too much, but I mean, the leaders are just making really nice moves. So yeah, we're still strong at the top end of the cycle. So, it's if you're not in the market, I wouldn't be, excited to initiate a full portfolio of new positions. But yeah, that's it for the market monitor segment. Let's move on to the portfolio side. All right, so decent day today in the portfolio. Portfolio is sitting at 109,320, and we are up about 0.81% on the day, slightly outperforming the market, which is what we like to see. And for those of you who are interested, I post a link in the description below of a website that tracks every trade of this account. So if you guys want to, kind of check out what we're doing, and when we're doing it, yeah, that resource is for you guys. Yeah, click that. I mean, the website's a little bit off because it doesn't track the options, but majority of the account is the equity and the ETFs, and so it does a pretty decent job. But yeah, all the options that I'm selling or / buying are not tracked in that, but it's the best that we could do. So yeah, feel free to click that link in the description and go check it out. But yeah, so we're doing pretty well. What I wanted to do today was kind of outline some stocks that I don't normally talk about here, but that are kind of a pivotal part of this portfolio, which is the income stocks. So, all of the bonds, all of the BDCs, all of the mortgage REITs, and then I have some stocks that have super high dividends. I'll try to go over that, a little bit later after the portfolio segment of this video. But yeah, I'm really interested in showing you guys that information. But yeah, moving onwards, the portfolio here is doing pretty well. I mean, we are now still outperforming the indexes. We're about 6 or 7% outperforming the SPY, and about 4 to 5% outperforming the NASDAQ. Because this website's a little bit off. We're about 1% or 2 better than what this website is tracking. So doing pretty well, outperforming the indexes, and we're excited about that. And then yeah, the yield on this account is around 5%, and that's what we're going to get into, at the later half of this video. So with that, let's go check out the stocks that we are invested in that give us the yield in the account, and yeah, go from there. All right, so what I'm going to do here is I'm just going to go from the highest yielding security or asset that we have in the account to the lowest. So what you guys see here is we have Zim Integrated Shipping. And this thing, I mean, it says that it's yielding 50%, but that's actually not accurate. It's about 17% yield so far. And, depending on the profits that they make, they distribute nearly all the profits to the shareholders. So this thing is a shipping company. I think it's an Israeli shipping company. And yeah, it's just a nice thing to have in the portfolio. We just recently added a little bit more. We had 75 shares. Now we have 100. So now we could actually sell calls on the thing and make a little bit more income, because this thing is pretty volatile as well. It pays a nice yield and it's volatile. So we wanted to, kind of get the 100 shares and then be able to sell some premium in this thing. So moving onwards, we have the Bitcoin High Income ETF. So, I've been wondering about this one, what we're going to do, because essentially this thing sells covered calls on Bitcoin, but Bitcoin's implied volatility has gone down a lot. And yeah, I'm thinking this thing is going to get squeezed pretty soon here. So we're just going to keep holding this thing, but it has a nice yield, it's about 28%. So, we're into that. Yeah, moving onwards, I mean, there's a lot of positions in this account, but you can basically group it into a few categories. Essentially, we have stocks like ZIM that pay high dividends. We have covered call ETFs like the Bitcoin High Income ETF. We have CLOs, which are collateralized loan obligations. Okay, basically debt issued to companies in exchange for bonds or shares and stuff like that. And that's what this is. This is Oxford Lane. This is an equity tranche CLO fund that yields a pretty penny, 20%. And so that's just part of the diversification of this income portion of the portfolio. So moving onwards, we have a short VIX fund, which is called SVOL, which basically shorts the VIX and pays out a pretty decent yield of 18%. At current prices. We're down on this thing because the VIX exploded, and these things don't do too well when they explode. But yeah, that's what that is. Yeah, and moving onwards, so I have some of these mortgage REITs. So you see AGNC, NLY, and DX. You could basically consider that like all one position, not even three. But essentially, these things are just mortgage REITs. They're levered. I think they're like 120 or 20% levered. So you get these nice 15% yields, but they're doing decently. Not as good as I would have hoped. A lot of the guys they buy the preferred shares on these things because they pay out the preferreds first because these things kind of just go down. So we're gonna monitor this. I mean, it was doing really well at the beginning of the year, and now not so much. But because we wanted to capture that full 15%, but because my bet was that bond volatility would go down and that bonds would catch a bid. And that hasn't really happened. The bond volatility went up and we've just been gone sideways. So yeah, anyways, those have a nice little yield. And if they can kind of catch a bid here, it'll be good. And yeah, moving onwards, we have a BDC, this FSK, OBDC, okay, and then this ARCC. And these are basically, you can consider these all the same position as well. They're just a little bit diversified, but essentially BDCs are just business development companies. They give loans to businesses, and so they have pretty decent yields. They get like 8 to 11, 12% yields on these things. It's pretty similar to CLO funds, but in terms of the yield, but yeah, that's what's going on there. And then, yeah, also I have certain diversified levered funds. So there's this Aberdeen Standard Global Infrastructure, which is they're just an infrastructure play in emerging markets. So I think they're invested in a lot of European stuff. And they have a nice yield, and the thing has been going up. This has been an awesome one. I mean, this thing is up a lot, and it yields 12%. So no problems with that one. Yeah, diversified levered funds. Those are pretty nice. And then this FSCO is another CLO fund. Okay, so we could talk about these, the preferred share funds. So yeah, I wanted to just get some exposure to preferred shares, and so we have a fund for that. And the preferred shares are they yield about 10%, 9 to 10% ish, and they also can have some upside. They've been kind of going down, but we have that diversification as well. Yeah, just more CLO funds and preferred shares. And so let's get into here. Yeah, we have this utility fund, this UTG, and that's been doing great as well. It yields about 6%, and it has just a basket of utilities, and it's also a levered fund, and that thing's just been going straight up. So we like this one. Moving onwards, we have some long-term bonds. So we're invested in the 20-year treasuries. We're invested in the long-term corporate bonds and sort of midterm corporate bonds. And so you can see that here. They yield about 5%. And we're liking that. They're finally starting to catch a bid, so they're going to start going up. Oh, I almost forgot this one. This HYLB, this high yield corporate bond ETF. So we're also in some, I guess you can call them junk bonds or high yield corporate bonds. and those yield about 6 to 7%. And they've been doing well, going up. So yeah, I mean, that's pretty much it. So we have our long-term bonds that we're bullish on, midterm bonds, we have high yield bonds, preferred shares, BDCs, mortgage REITs, and then some diversified ETFs that are levered into, income related stocks. And yeah, that kind of makes up the entire, and I think I already said BDCs, but and short volatility and covered call ETFs. So it's very diversified. Yeah, that's what we've been doing on the bond side. These things don't really move that much, so they don't show up in the top gainers and top losers that I normally show. But I just thought I'd show you guys, what's going on here and what I'm doing on the income side. So with that, let's move over to a little bit of TA, just so I can show you guys what these things look like. And yeah, let's move on to that. All right, so what you can see here is this is UTG. This is the Reeves Utility Fund. And as you can see, I mean, it has basically just gone straight up. This thing is up 30% from the lows, and this thing yields 7%. We love it. Yeah, moving onwards, this is the credit fund. So this thing doesn't really move a lot. It's just kind of like slightly moving up, and we had this kind of panic. But it's up nicely from the lows about, what is that? 36%, and this thing yields 11 to 12%. So we like that. This is the one I really like, this ASGI. This thing is up about 20% from the lows, and it yields about 12%. This is the standard global infrastructure, in emerging markets. Maine, this is a BDC. This thing's up about 25%. So, I mean, people might be surprised, like, oh man, all these income funds that yield 6 to 12%, like they probably don't move that much, but actually you can get some upside in these things as well. Here's the junk bonds. The junk bonds are moving up really nicely. More BDCs, more junk bonds. This is the other junk bond ETF. It's up about 7%, and it yields 7%. Here's a corporate bond ETF, and this is, I was going to sell some calls in this thing, but and the long-term bonds, I actually think the long-term bonds are going to catch a bid here. They look like they're ready to go. A lot of volume coming in. I think long bonds are going to go down, and these ETFs are going to go up. I think the bond rally has just started, and you're starting to see equity start to explode because of it. And you're even starting to see it, like a lot of these guys are issuing a lot of debt to buy Bitcoin and do all this stuff, because I think if you issue convertible debt right now or variable debt right now, it's going down. So you just like load up right now on debt and buy hard assets like Bitcoin. That's what a lot of people are doing. So I think the smart money knows what's about to happen, that the bonds are going to catch a bid here, and we're going to lower the interest rates. Yeah. Oh, this is in my other account, but this is a pipeline ETF that yields, I think it's like 6 or 7%. But anyways, I wouldn't want to go through every single one of these things, but essentially, these bond ETFs, they all yield 6 to 12%. They're going up nicely. We had a little panic where we thought that there was default risk and stuff like that, but I mean, now that's behind us. So I'm actually pretty enthusiastic about holding these things for the long term, and then rolling some of the. I've been kind of dripping them back into the product, which provide the dividend. But I'm thinking about in the future, not doing that and taking the income and maybe doing some long-term leaps and doing some diagonal spreads. But maybe that's for another video. But hey, if you guys made it this far, thank you so much. Feel free to comment. I said a lot on this video. Like and subscribe, and yeah, I'll see you guys on the next video. Cheers.